Now, probably to the most important part, which is the Q&A, which I invite you to have any burning questions that you wish to ask. Please raise your hand and tell us who you are and any questions that you may have. Any questions before we proceed? Let me whilst people are thinking of the questions to ask our panelists, just to sum up some of these thoughts. Prof here had actually started us off by actually painting the picture of the economic background and actually indicating the fundamentals that are actually necessary and how they define the context in which the financial and banking sector actually operates and how that will impact the future. And then Dr. Muzaffar came out with another very important point, which was that we are at a crossroads, and that crossroad is very critical in how we move forward. And he was at pains to point out the ESG, the G part, which was very important, and the example of the Islamic banks came into play there as well. So that's a key thought for us. And we had Henry actually really ask us some questions, and his key phrase was, we have to rethink. So rethinking is actually very important as we move forward, and that was then helmed by Pervaiz by actually telling us something about rethinking, and that was actually about learning and relearning. So I think these are very fundamental questions as we start navigating to the future. So are there any questions? Do I see anything raised?
Yeah, we've got some questions which have come in through the QR code. If I can read them out to you. First one is, how can financial institutions effectively balance innovation with regulatory compliance?
Could I ask Prof. Ye?
Yeah, I think that's very important in terms of ensuring that you strike a balance between promoting innovation while at the same time ensuring that you have sufficient so-called financial security and, importantly, ability to guard against excesses or what they call imbalances in the overall economy, especially the financial sector. So I think one important, of course, the central bank has established what they call this sandbox for innovations to be carried out, what they call beta kind of testing, to ensure that whatever applications, including digital banking and various other types of products and services, are tested fully, and importantly, to look at some of the ramifications, not just across the financial sector, but also the indirect, unintended consequences. Because the challenge for financial innovations is that just like all the derivative products, US and Europe have created so much havoc, especially financial engineering, including cryptos and all that. So we have to be doubly careful. And I think from a regulator's perspective, it would seem that it's better to be prudent, to be safe rather than sorry. So I think that kind of underlying approach to philosophy in terms of ensuring protection comes first. Then only if proven to be safe, then you carry it out. So basically, the key principle here is prudent. I think prudence is a hallmark of financial regulations and all that.
Thank you very much for that. There's another question which has come in from the audience, and that is, how should financial institutions adapt to changing customer expectations in the digital age? I think, Pervaiz, maybe perhaps you are well placed to be able to answer that.
Right. Okay. Maybe first off, the answer to the first question first, so I can add a little bit. Actually, the digital bank framework is probably the biggest sandbox actually at this moment, right? That enables actually innovation in the financial industry. So what it does have is a guardrail, and the guardrail actually says that the banks are not able to underwrite actually more than the total assets of 3 billion ringgit until you graduate actually from the foundational years. is what that is. So within these guardrails, it's when theoretically, I say theoretically because we're still experimenting it, right? Is that we're then able to experiment different ways of working, different ways of credit underwriting, actually with whatever data that we can have, actually within the ecosystem, so that we'll be able to actually lend out and give financial access. And then with that, I think areas of that guardrail, it's when we hope together actually with all the fintech players as well as traditional banks will be able to work around it and try new things. And because we are limited to how much we can grow during that period, means that there should not actually be any systemic risk to the financial industry. So that's around the innovation and just making sure that there's still regulation that actually comes along with it. As to the question around how do we keep pace, right? Actually, with customers' behavioral changes. Is that, Prof? Is that the exact question? All right. The reality is that customers' behavior, what customer wants, what the technology is changing every single day. And when we build, and the fact is that we've been extremely fortunate because we've been able to build on a blank piece on canvas, right? And today's technology and frame allows us to be actually quite modular, quite agile, and we can change. And we design actually with intent to be able to change along with any behavioral changes that customer may have. They may actually want to try new solutions. And the fact is that now we know that not everybody actually likes to bank the same. We are looking for more hyper-localized, more hyper-personalized actually kind of solutions. And the technology today enables us to do so, enables us to actually build that personalization, enable us to actually build along with that the efficiency and hopefully also resilience actually to those changes. Yeah, so Prof.
Thank you. Dato.
Said to the first question just now, I wanted to just compliment to Professor Ye's point about prudence. I completely urge when we look at innovation and regulation, you'll be surprised that the guidelines in the regulation actually allows a lot of innovation. So it's truly to understand the regulation actually. That's number one. Number two, we are in a very open economy, open cross-border transaction, multiple jurisdiction. I can be envious of Pacey's sort of opportunity in the digital side. You'll be amazed as well that cross-border multiple jurisdiction allows that innovation as well. Singapore regulation, Thai's regulation, and the devil's in the details. I completely urge that. Last but not least is the guardrails that Pacey was talking about. I think in our world, the guardrails is capital, guardrails is liquidity, and of course, what's the risk appetite that we're talking about. Just wanted to put in that context. Thank you very much.
Henry, do you want to add anything to that?
Maybe I'll need to borrow. Oh no, I think it is. Just to echo that, we Fusang as a platform are probably the most out there in terms of what we're doing. I haven't come across a single regulator in a single jurisdiction that has been a barrier to what we want to do. And if anything, I think that the regulators have always been incredibly supportive. Our challenge is always, how do we take existing market participants and update them to new technology? And interestingly, in most cases, I find it's the regulators who are trying to shove the existing financial institutions into using new technology.
Thank you. May I just take some more questions? But before I do that, perhaps I can ask Dato a question about how Maybank itself is changing from its traditional banking framework. Perhaps you could comment on how the trend of core modernization is taking place within Maybank and how it's keeping pace with the shifts in technology.
That's the question my board always asks at the time. I think the pragmatic approach in short is and taking from AC's point on looking at sandbox and you're right, the customer angle part of it. And rightly mentioned, sometimes we bankers, we slightly tend to forget about the customer part of it, and we think that we know a lot of things, and it's just purely on the empathy of the customer. The short answer basically is looking at the various small scale sandbox. How do we apply that into the innovation, be it not just the wholesale banking, but also the retail, even our insurance side as well. I think that's the way forward that we want to take a look, because it's I hate to use the word bets, but there's some big bets sometimes we have to put in, and this is where the crossroad that I was talking about. It's some big decisions. Eventually, the industry is going to evolve the next couple of years. Thank you very much.
Thank you very much for that. Maybe I can just ask Pacey another question, which is, there's a trend of fintech transitioning from being disruptors to enablers, which sort of seems to suggest a collaborative future. How does GX Bank view the evolving dynamics? Perhaps you could comment on that.
It's a tough one, no? Fact is that I think we are placed here, right, to try to actually disrupt the financial industry, right? And the fact is that when we disrupt, and then disrupt actually with intent, then you become an enabler. And that's important. So, and from the perspective, therefore, the purpose of why one is actually being set up is an important one. For all digital banks, especially, and it's surely actually all the banks in Malaysia, I'm sure, right? When we actually set up our purpose, beyond making sure that we deliver for our shareholders, is really about being able to deliver to our customer actually at the end. And for the digital bank, it's really about then delivering actually for the underserved and the unbanked, whom today actually have a lot less financial access that they would actually otherwise, with many of us actually in this room who are actually more served. And with that in mind, it's when we take supposedly very disruptive solutions. I'm not sure is that really quite disruptive, but enablers like the data that we have, voluminous data that's available actually out there in the industry. And how do we package that? How do we use that actually in a useful way to then actually deliver actually for the customer at the end, to enable access, to enable them to enable actually solutions that's going to be suitable actually for the clients actually at the end. And the collaborative effort cannot only actually be done, I think, with one industry. It does actually take, I've said this many times, it takes the entire actually village to make sure that happens. So it's not only the financial industry, it's going to be private companies, it's going to be the government, it's going to be certainly the regulators to actually find new ways to find these disruptive solutions, I put it in inverted commas, and make sure that it becomes an enabler. And in this regard, I think one last point, we are actually at a pretty, I think, pivotal moment, I think, in Malaysia, to be able to do so actually right now, with so many of us, I think, certainly actually, like, for example, attending this conference to talk about the future of finance. But certainly, as we look at where the regulations are at this moment, I agree with Dato, right? It is not restrictive. It just enables us to challenge the corners to find new ways of actually doing things.
Thank you very much, Pacey. I just want to move on to a couple of questions which have come from the floor. They're more about the shifts that are taking place in terms of technology. The first question is, what are the potential impacts and challenges of integrating generative AI technologies into the future of finance and banking sectors, especially considering aspects like security, personalization of customer services, and automation of complex financial tasks? And that is followed similarly. How do you perceive the impact of cryptocurrencies and blockchain on traditional banking models? And very specifically directed to Henry, which says, thank you very much for your insights. You seem to have mentioned one of the issues of tokens is that it represents dodgy assets. If we were to tokenize real estate, it is pegged by a tangible asset that can be easily valued. But tokenization of real estate has not really taken off in a big way. Some people might say it's because investors prefer investing in REITs, but others that Other than that, what do you think poses the biggest challenge for securitization of such tangible assets? Maybe, Henry, you start first, and we will invite comments from the others.
I'll let someone else talk about the generative AI in a bit. As I said, to me, the most interesting aspect of tokenization, I think, is to take existing asset classes that already transact at scale, whether in primary or secondary markets, and simply digitize them. There's a lot of talk about tokenization of real estate and gemstones, all kinds of other niche asset classes. I think that's very interesting, but whether or not tokenization will bring liquidity, I don't know, because there isn't liquidity in those asset classes today. What I'm specifically interested in are, for example, things like the Islamic finance market, a market that transacts at scale in both the primary and secondary markets, but in my opinion, doesn't quite work as well as it could. You look at Malaysia as a simple example, we account for 70% of the world corporate sukuk market, but very domestically focused. Domestic issuers, domestic buyers, Maybank helps facilitate a lot of that transaction. And I think if we can start to take existing sukuk, including the one that we tokenized a few weeks ago, A1 rated, short duration, very boring product, if you will, and say, all right, how do we now, number one, get it listed? Most sukuks are traded OTC. How do we form listed on exchange 24/7 markets? But just as importantly, how do we now start to plug in cross-border banks, distribution, etc., of the exact same product, the exact same business to be done, let's say, again, just new technology.
Thank you, Henry. Perhaps moving on to one of the AI impacts, AC or Dato?
Right. I'll pick this up. For generative AI, I think it's a function of actually use cases and actually what's data that's available. Certainly, as we sat back and think about the use of generative AI, actually at least like for the banks, right? We can see a couple of use cases already. So the first use case is certainly actually using AI to the LLM, right, to actually figure out how do we then enable the service of customers a little bit better. So using, lack of a better word, actually chatbots, but a much cleverer chatbot, much cleverer, right? Just like the other day, I'll just share one story. 3 weeks ago, one of our very young engineers, right, took a couple of weeks to actually work on LLM, right, a generative AI and LLM, to actually figure out how do we actually chat properly actually with our customer and actually and quickly, right? In 3 weeks, right, we're able to actually train a model to be able to speak in English, be able to speak in Malay, we'll be able to speak in Bahasa Malay as well, right? And also being able to answer questions is not related to banking at all, right? So the ability to use these kind of new technologies to ensure that we are more relevant actually to customer, it brings and to bring efficiency actually to the banks, right? It's amazing actually. That's one. Other use cases that we've seen is using generative AI to detect fraud, to be able to take this voluminous data actually out there and connect actually all the different dots, right? And as customers actually transact with us and figure out whether is the network of that fraud, is it going to be much bigger than what it really is? And the ability to train those models to detect fraud is a pretty important component and need actually for any banks, right? And there are plenty of other use cases is out there for generative AI that's extremely interesting, and being able to use it, I think, responsibly. It's really a function of prioritizing actually which one we want to start using first, and whether we've got enough data for us to be able to train the models actually do the necessary. So it's exciting times, you know.
I just want to compliment that. You're completely right. The generative AI is the future. I'm till today, I'm blown by the LLM, the capacity that could be used, be it in all sectors, I think, be it in our capital market, be in the retail side and so forth. To me at the moment, and maybe I'm a bit naive on this, my biggest challenge, I think, in the conversation, and I think to folks in this room is, how do you complement that data outside with the internal data And then we map the various IT security risks, the Negara, RMIT, Risk Management Information Technology guidelines and so forth. That part is if you ask me, is the tricky bit at the moment. I think the LLM is fantastic. I think it's the future. But the managing of the data is it's tricky. And maybe pick some of your blockchain solution to work on that. Thank you.
Thank you very much. Just staying with you, Dato. We have a question over here, which is moving track and questioning about sustainability issues. The question is as follows. The US and the UK are backtracking on ESG commitments for political expediency. BlackRock has been claiming ESG climate change is a hoax. Can and should banks in Asia still take or rely on ESG leadership frameworks and directions and support from the West? So, a question on ESG, a tricky question. Perhaps you can start that off, and we will move to the others.
If I can be quite candid, this is always a tough conversation, not only with the West or the East, but even internally, together with our sustainability team. How green is green enough? How emission coming out in that sense? Are we greenwashing and so forth? My simple, quick answer at the moment is we got to stay on the course. And it's okay that it's half-baked on some of our clients in terms of disclosure or the controls of their relevant scope 1, 2, and 3 of their emissions and so forth. We got to continue that journey. There's no two ways about it. Some of the sustainability could be recognized by certain jurisdiction or certain NGOs and so forth. Some will say it's ridiculous. If you talk about palm oil itself, it's a big topic altogether. How peat is peat, how the drain is going to work, and so forth. We do have the standards, the MSPO, the RSPO. It's not perfect, but at least that governance side of it helps the discipline of things. So I completely urge the pragmatism, the discipline, stay on course on this. There will be a lot of noises, and I'm actually excited. The recent announcement of the budget by Prime Minister on the Sukuk biodiversity. This is creating a local carbon credit market, and we are excited that we are part of it. We're looking at it. To me, it's a mapping of sustainability with the same solution that we did in the development of the Sukuk market once upon a time. The development of the Sharia banking over the last 20-25 years. Same discipline, stay on that course. There will be some derailment, but I'm convinced this is the way forward to impact on this. Thanks.
AC, would you like to add to that?
Okay, I think for us, digital bank, yes, the E part is probably, shall I say, an easier delivery, given that we're actually all a digital bank, right? So what that means is that what we offer up customer is actually no paper at all, right? And even actually within the bank itself, you cannot find actually more than one printer actually in the organization. And when I print, I'm the only one, I think, in the bank that prints anything, because nobody else prints, right? And all my colleagues look at me like, what's wrong with you, right? Actually, as you print. But on a more serious note, the reality is that actually, as a fact is that many of our consumers are actually trying to go as digitized, as paperless as possible. So, and in a quest of actually getting the last mile of them to be digitized, it's not only the individuals, but as well as SMEs. I think it's important then actually for us as an industry, bring them forward and get everybody actually digitized and go paperless. So that's one. For us, actually, in digital bank, I think the S is much more interesting. G is a given because we are a bank, so we've got to be governed properly, right? The S is actually a lot more interesting. So social bit, right? How do we actually as industry, right, move to ensure that we see to the last social mile, right, to make sure that we give the financial access to that group of customers whom today do not have access to. And that's going to be an interesting proposition, I think, for anyone, any player actually right here. How do we use the alternate data that we have, right? And give the folks out there the access, right, to be able to underwrite them actually in a way that is not only relevant but also beneficial to them, because there's always the danger of overextending, and that's something that I think we in industry will have to take that seriously, and hopefully with the technology and the data availability actually out there, we know how to use this data, we'll be able to make a difference in the short term and the medium term.
I might add as well,
Sure.
just looking at the asset side, there's a lot of focus in ESG on the E, green bonds, etc. I think the S and the G are just as important. I think that's why Malaysia, I think, is right to focus, for example, on the Islamic finance market. That's a space in which we can play and win because we already have a big bulk of assets that we should be promoting as fitting perfectly into ESG frameworks, including, we talk a lot about, UN-SDSN, for example, and it's a sad truth, I think, that some of the highest quality assets we have today in the bond and sukuk markets, government-linked bonds, etc., are the ones that are least accessible by individuals. Again, that's where I think tokenization should focus, not weird assets, but how do we take government-issued securities and make them more accessible by all of us?
Just to compliment on Henry's point, especially an exchange like yours as well, the idea of the efficiency of the capital market itself helped to self-govern. The idea that we could disclose with the digitalization and the overall full disclosure in that sense, regime-based regulation helps to address the S and the G. So I just want to echo that because we have the tool to do that. Again, touching on palm oil, for example, yes, it's not perfect, but the idea that we have MSPO, RSPO, applies that governance, that's a start, that's a good start that we could take a look. But we still have to develop the economy and build that governance strong of it and impact to the social solution to it. So again, I just can't 100%. Emphasize enough on that S and that G part of it. Just don't, pardon my language here, don't go crazy on the green too much, Thank you.
Thank you very much. Just moving back again once a little more, we have another set of questions which are really to do with security and risks during in the transitions. There's a question here which says, apart from the positive development in fintech, what are the investments put in by the banking sector to ensure security? Even with existing practices, there are so many scam calls from banks. So perhaps Henry, you could comment on security issues.
Yes, absolutely. Well, I'll let the bankers talk about the banking side of things and scam calls. But as I said, to me, new tech always brings with it new risks. And the best way to, you can always talk about grand dreams, but the question is always, what's the next step? What is executable today? And to me, the best way, especially in financial services, to think about new technology and innovation is to say, what are the existing jobs to be done? What do I as an institution need to do for my customers? And then just apply new tech to the same processes. That's also how you keep regulators the happiest. And I was talking earlier about, JP Morgan as an example. They've created these tokenized deposits, still the same kind of legal instrument, but now you can start to move money 24/7, even over the weekends between different JP Morgan bank accounts. But a great example of how new tech can mean lower risk is they're starting to think about what they call programmable money. So number one, how can you rethink the repo market? The whole world is driven by overnight financing. In many cases, you don't actually need the money overnight. You need it for, let's say, a few hours. And JP Morgan has started to do 2-3 hour repo loans. And the inevitable end state of this is actually what I call flash loans. So loans with time zero, when you borrow and immediately repay the money. For example, if you're making markets, I might need to borrow money, buy something, sell something, repay the money. And with blockchain tech, you can do that all as a single transaction and actually reduce risk. I'm immediately paying back the money if the transaction works or the transaction doesn't go through at all. great example, I think, of taking existing process and using tech to make it not only more efficient, but actually potentially safer.
AC?
All right. I think 3 points. First is, I think, to Henry's point, new tech, whilst gives a new risk, but also new capabilities. So we see already actually now the ability to monitor 24/7, right, on what's going on. And not only do you monitor, you're able to get alerts, right, as it comes. So we'll be able to respond actually quite quickly. And that's quite an amazing one, right? To see actually the new technology out there and how it can almost actually give you that sorry, for a moment, like, what's that word? Okay, that the ability to actually have this big oversight on what's going on actually in the bank. So that's one. Second is around data. The ability to actually collect all this data and make sense of it actually in real time. It's actually new capabilities we haven't seen any time. At least my last 25 years actually in any banks, in my bank. And now that we're actually seeing it right now, and to be able to respond to it actually immediately with the data that we have and make sense and actually connect the dots, it's a real good, I think, fraud protector, right, to a very large extent. That's the second, and there's so much more you can actually do with data. And the third is around education. It's we've been for years, I think, as a bank, we've been trying to actually educate our customers to say that do not actually give this password, make sure that if it doesn't come from the bank, please do not respond. But the reality is that education, whilst it keeps on going, you can only give it actually so much, right, at one time. But to be able to give it actually at a point where it's important, where it's at a part of journey where they could be susceptible actually to that risk, it's an ability and a capability that I think now with technology we're able to give. So in that way, it's really, I think, three. One is tech capabilities. Second is data, right? And third is continuous education. Just three.
Could I just ask another question which has come from the floor, and so rather tricky and difficult question. It still relates with the emerging risks. And that is, how will the Israel-Hamas conflict affect the financial institutions now? I'm not sure if anybody wants to take that. How will the Israel-Hamas conflict affect financial institutions? Really, Prof, perhaps that's the most difficult question, and we need an academic diplomat for this.
Yeah, I think it will be highly indirect as well as diffuse, and perhaps you will take a lot of convergence of other negative factors to actually have an impact on our financial systems. I think of immediate concern now is, of course, the impact on the local economy is some of the ongoing boycotts, but those are very isolated in terms of the impact on the real sector. That could have implications on business loans and their ability to repay some of them. But other than that, I think it's highly diffuse.
Thank you very much. It's definitely a curveball there, which many of us not able to really address fully. But just to close out, looking at this time, Prof, here once again to you. Perhaps in closing, perhaps you could comment on your role as the member of the advisory committee to the finance minister. What are the key policies that you would advocate to bolster Malaysia's economy in both the short run and the long run?
Okay, thank you. Of course, we can broadly define those basically two buckets of policies. One is to actually increase the resilience of the economy, because we have a lot of short-term vulnerabilities, like we need to rationalize our fuel subsidies, which has ballooned to unsustainable level. We need to raise the income as well as the wages, given the depressed wage levels and income levels of the large portion of the population, and also the rising cost of living. These are all short-term issues, so we need to enhance the resilience by having policies that rebuild the buffers, including those sectors and so-called players of key economic agents that are facing vulnerabilities in the short term. But in the medium to longer term, I think what's important is to sustain structural upgrading, increasing our private investment to GDP ratio from a current 15 to 17%, perhaps to 20%, and that will help in terms of the structural upgrading as well as giving a boost to the potential growth of the economy. Because current potential growth is already about 4 to 5%. So in order to raise it to 5 to 6% as envisaged in our draft Malaysia plan or subsequent plan, we need to actually boost investment and accelerate the structural upgrading, particularly through the transformation, through energy transition roadmap, and then very important, how we can leverage on the current geopolitical environment to actually attract more investments in Malaysia. We could be missing the boat, but we need to redouble our national investment agenda. I think that would help raise our potential growth to a higher level. Thank you.
With that, just looking at the time, we've run out of time. May I ask everybody to thank our speakers for sharing their valuable insights and experience. And thank you also for the audience for the many questions that you raised. With that, I hope that you enjoyed the session. My speakers made my life very easy by making sure that they answered all the questions very well. So thank you once again, all of you. And that's the conclusion of this panel. Thank you.
Thank you very much, Professor Pervaiz. Ladies and gentlemen, a big warm round of applause for all those on stage. At this point, I'd like to call upon Professor Dato Elizabeth Lee to be on stage to present a token of appreciation to all our panel members who are on stage right now. Please remain on stage. Yeah. Ladies and gentlemen, Dato Elizabeth Lee. This is just no ordinary monopoly. This is the Sunway City monopoly being handed to all panelists and also our moderator. Once again, a warm round of applause. Clap your hands. Wake up, wake up, wake up. Yeah. Can we move to the center for a nice family photo there? Yes, thank you. Okay, we're going to try this once. Let's do a freestyle. Thank you very much. Thank you, Dr. Elizabeth. Thank you, Professor, and to our panel members. Ladies and gentlemen, we'll be taking a short break. We'll do what the British do, take a tea break. And of course, we'll be preparing for our keynote address, which happens very, very soon. The minister will be here by 12. We'd like for you to be here by 11:55. More importantly, be here early because the national anthem will be played around that time. So we'd want for everyone to be in the room when the national anthem is played. Thank you very much. Enjoy tea. We'll see you back in a short while. And just so you know, to usher you back in, we'll have people to usher you back in. If you don't hear them, listen out for the music. We'll be playing the music really loud to usher you back into the hall at 11:55. Good morning, everyone, and thank you very much for joining us right here at the Asian Strategy and Leadership Institute, the ASLI Banking Finance Summit 2023. Also, don't forget our socials. It's ASLI My Official and ASLI.com.my. ASLI My Official and ASLI.com.my.